What if your investments could literally pay your rent, or your groceries, or just cover your Netflix, your phone bill, or that overpriced lunch you love? Well, you've come to the right place, because in this video, we'll reveal 5 passive income investments that pay you every month. Let's start with the first one, something you could hold for decades and still sleep peacefully at night. We're talking about Dividend Aristocrats. Now, before we go further, what actually is a dividend? It's simply a payment a company gives to its shareholders, usually every quarter or even every month, as a way of sharing profits. Think of it as a thank you for holding their stock. So when you own shares of a dividend-paying company, you're not just relying on the stock price to go up, you're getting paid along the way too. Now, Dividend Aristocrats aren't just any dividend stocks. These are rock-solid companies, businesses that have increased their dividends for at least 25 years in a row. Not just paid them, but increased them every single year. Through recessions, market crashes, and inflation. That's not just stability, that's serious commitment. These companies are usually big, well-established names, and they've proven year after year that they prioritize their investors. Those kinds of companies didn't just survive the dot-com bubble, the financial crisis, and the pandemic, but kept growing and kept rewarding shareholders. So why are Dividend Aristocrats such a powerful tool for monthly income? Because of something called reliability. When you're trying to build passive income, it's not just about how much you earn, it's about how often you get it, and how likely it is to keep coming. Even if the market has a bad year, many aristocrats continue their payouts, because cutting a dividend would ruin their 25-plus year track record. And for them, that reputation is everything. Now, some of these stocks only pay quarterly, but if you build a mix of different aristocrats with different payout months, you can actually structure it to get income every month of the year. Smart investors do this all the time. And at the end of the day, when you're earning money just for holding something reliable, that's the definition of passive income. Some well-known dividend aristocrats are Johnson & Johnson, Coca-Cola, and Procter & Gamble. Alright, so dividend aristocrats give you reliability. But what if you want something that generates more income? Maybe something with a bit more firepower. This brings us to the second investment, covered call ETFs. And this one's interesting, because most beginners have never heard of it. But it's a game changer. And if you're new to this, an ETF is basically a basket of investments, like dozens or even hundreds of stocks, grouped into one single fund that you can buy, just like a single stock. Covered call ETFs buy stocks, like any other ETF, but then they use a strategy called writing covered calls. In simple terms, they rent out the right to sell their stocks to someone else for a small upfront payment, and they collect that payment month after month. That income is then paid out to you, the investor, as a monthly dividend. And because this strategy generates cash even in sideways markets, it can be more consistent than regular dividend stocks. Of course, nothing's perfect. The trade-off is that these ETFs usually give up some of the upside. If the market goes way up, they might not capture all of it. But in return, you get steady, high-yield income. And for a lot of investors, especially those focused on monthly cash flow, that's a trade worth making. Here are some of the most popular covered call ETFs. And in case you're wondering, those are called ticker symbols, kind of like short nicknames used to identify each fund or stock on the market. If this video is helping so far, make sure to like and subscribe so you'll never miss a video again. Now, here's what's coming up next. There's one type of investment in this video that sends you income every single month and grows along with the real estate market without being a landlord yourself. You'll find out what it is in a moment. But first, we need to talk about a mistake almost nobody talks about, but it could make or break your passive income plan. Most people make this mistake without even realizing it. They build their passive income plan on unstable ground. They put everything into just 1 or 2 stocks. Or worse, they chase whatever's trending on social media. The problem? No diversification, no stability, and zero margin for error. Passive income isn't just about how much you can earn, it's about how predictable and resilient that income is. And that's exactly where our third passive income investment comes in, REITs. That stands for Real Estate Investment Trusts. And if you've ever wanted to invest in real estate, but didn't have the cash, the time, or the desire to become a landlord, REITs were basically made for you. Here's how they work. REITs own real-world properties. Think office buildings, apartment complexes, warehouses, data centers, even hospitals, and they rent them out, just like a traditional landlord. The difference? They're required by law to pay out at least 90% of their taxable income to shareholders. That means, as long as those properties generate rental income, you're getting your share of it, usually every single month. It's like owning real estate, without owning the problems that come with it. Now, REITs can be a little more sensitive to interest rates. When rates rise, their stock prices can dip temporarily. But the dividend income? That often stays strong. And for long-term investors, those price dips can even be an opportunity to buy more of their shares, resulting in higher yields, meaning more income for every dollar you invest. Some REITs specialize in residential buildings. Others focus on industrial storage, data infrastructure, or healthcare facilities. The variety means you can tailor your exposure based on what you believe will thrive in the future. And just like with stocks, you don't need to pick individual REITs. There are ETFs that bundle dozens of them together, giving you diversification in one single click. Here are some of the most popular REITs. Alright, so we've talked about Dividend Aristocrats for reliability, covered Call ETFs for higher monthly income, and REITs for real estate exposure without the headaches. But what if you want something even more consistent? This is where monthly dividend ETFs come in. Most companies pay dividends quarterly. That's once every 3 months. But monthly dividend ETFs are designed specifically to pay you every single month. It's like getting a paycheck from your investments 12 times a year. That might sound like a small difference, but here's why it matters. If you're trying to create monthly cash flow, whether to pay bills, reinvest, or just feel the progress, it helps to have that income line up with your actual expenses. And getting those payments every 30 days gives you both the psychological win and the financial flexibility. Now, not all monthly dividend ETFs are created equal. Some focus on real estate, others on bonds, and others on income-generating stocks. But the good ones manage to deliver consistent payouts, often having yields in the 4 to 8% range, meaning you could earn $4 to $8 a year for every $100 you invest, just from the monthly payouts. Here are some of the most popular monthly dividend ETFs. Now we're down to our final pick, and it's the one that fuels long-term growth like no other: Dividend Growth ETFs. These are funds that hold companies with a history of increasing their dividend payouts every single year. Not just maintaining them, but growing them too. And that's huge, because while a 3% yield might not sound exciting today, if that payout grows by 10% every year, your income doubles roughly every 7 years, all without investing a single extra dollar. Think of it like a snowball. Every year, it rolls down the hill faster, because the base keeps getting bigger, and because these funds are full of high-quality companies like Microsoft, Visa, and PepsiCo, they're built to last. Here are some of the most popular dividend growth ETFs. Let's quickly tie all 5 of these investments together. Dividend Aristocrats bring reliability. Covered Call ETFs deliver strong monthly income. REITs give you exposure to real estate without the maintenance. Monthly dividend ETFs help smooth out your cash flow. And dividend growth ETFs ensure your income keeps rising over time. But how do you actually build those positions without worrying about market timing or buying at the wrong moment? Because that's the part most people mess up. But there's a simple strategy that removes all the stress, which you'll learn in the next video on your screen.